have been serviced over a while, a
Yeah.
period, and the law implicitly states that if you do charge above the recommended rate, then you are in trouble because you will then face a sort of penalty. But the law also says that these then also have to come under the law. So it can be applied in retrospect, in hindsight. So we expect to see a sort of operationalization period, maybe 90 days, depending. I think there's still going to be a bit of negotiation because they've sort of issued an implicit threat, so I'd say, because they have said in that clip right there that, well, are they expected to continue lending, or will they then retreat to the safer zones of lending and ignore the lower echelons of the market? And the key thing here is interest rates are usually mostly individual. They're calculated depending on each person because of your profile, risk, your history, and of course, what you need the loan for. Is it personal spending? Is it are you buying an asset to, well, produce some sort of good or service? Is it a business? Are you a corporate? So those sorts of things. The operationalization of the law will be much more difficult than it looks presently because there's lots of little dynamics that will have to go into making sense of it all, and then of course applying this across the board to different people. The fact that the central bank then gets to meet everyone so often to set the rates which are indicative upon which this will be based also means that it is sort of floating. So if the economic situation does change, Kenyans can then see these rates trend upwards again or downwards depending on what the situation is.
All right. Let's talk about other, developed countries that have their interest rates lower than even what we are happy about. What is it that they're doing right, and has it worked for them?
Now, part of our challenge is the fact as a developing country, first two things, the fact that the curve that usually informs borrowing, it's plotted on a graph, and at one end, almost risk-free, is government. So it is very easy to lend to government. They will sell you bonds and bills every so often, short-term borrowing or long-term borrowing, and you go to the central bank and buy this with an almost guaranteed rate of return. Hence, meaning that if you buy that, you're almost guaranteed to make the money that they say they will give you.
Right.
At the other end of the spectrum, you have the local borrower running a kiosk or driving a matatu. So if that guy borrows your money, he could get arrested, matatu impounded, he could have an accident on day one. So what then happens to your loan? Do you then have to wait for insurance to go through the insurance process for 6 months before they can give you, well, a sort of cover for your loan one way or the other? Lots of little different dynamics come into play.
All right.
And the indication here is that with that sort of thing out there, most people would then prefer to lend to government because it is the safer option.
Yes.
And with government in the market borrowing like they have been, borrowing quite a large amount, they then tend to crowd out the rest of the market. Meaning that if you want to borrow the same money that government is offering, you have to offer a more attractive rate of return for the banks. Hence the trending upwards of interest rates. So it's still a dynamic. If the Kenya government was to stop borrowing totally, then maybe we should start to see a trend. But we expect them to also maybe start to borrow less, but not in the real sense of the word, because all the roads and other things
Have
that
to
we
be
see
built.
going on right now, so depend on exactly